Our next topic of discussion is ratio analysis. Here we're going to discuss about the overdependence on numbers. So the balance between the overdependence on numbers versus exercising your judgment. Now, ratio analysis can be useful, but it can also be somewhat misleading if not interpreted correctly. So we need to be very careful. Without going too much into details about finance or financial and accounting systems, let's just discuss about ratio analysis. And let's pick up one example to demonstrate our point. Let's discuss about current ratio. Now, current ratio is equal to current assets by current liabilities. Now, you would want your assets to be more than your liabilities. So a current ratio of more than 1, greater than 1, usually is a good indicator of the health of business. So if the current ratio is greater than 1, that means your assets are greater than your liabilities, which is usually, if this ratio is greater than 1, it's usually a good indicator that your business is in sound health, good health. But we need to be also careful about this. Let's demonstrate. Now, current assets is equal to cash plus accounts receivables plus inventory. So current ratio is equal to cash plus accounts receivables plus inventory by current liabilities. Now, if the current assets is high, if the current ratio is more than 1, is greater than 1, due to the current assets being higher than the current liabilities. But if the reason for the current assets being high is that the inventory is high, because as I have said, current assets is equal to cash plus accounts receivables plus inventory. Any of these three contributing factors can actually scale up the current assets and hence the current ratio. So if the reason for its being high, current assets being high, is that the inventory is high, then what it actually means is that the inventory management is not optimal. We are stocking excess of goods and we're not able to sell them as per our plans. So our capital is being held up in the inventory. This is not something good. So in this case, we just experienced an example where the current ratio is greater than 1, the current assets is higher than the current liabilities, but though this is usually a good indicator of the good health of a business, in this case, the example that we just demonstrated, it's not so because of the reasons we just explained. So we need to be extra careful when dealing with these issues about current ratio, about in fact, for that matter, any analysis, any financial analysis or other analysis. So the question is that there needs to be a balance between the overdependence on numbers versus exercising your judgment. Numbers are fine, but if interpreted incorrectly, it can lead to disastrous consequences. Similarly, pure judgment will not lead you anywhere. You need to have numbers to back up your decisions. So there needs to be a balance between these two aspects of your business, for your business decisions. The dependence on numbers, what we are saying is we should reduce the overdependence on numbers, and we should increase you should increase your judgment, exercising your judgment. So a right balance will help you in your business to make the right decisions, and this will go a long way in the success of your business decisions, and hence of your business. To know more about ratio analysis, enroll at the Self-Study MBA. To know more about management, business, finance, and or other specializations, visit the Self-Study MBA website, our website, selfstudymba.com.